Hello everyone and welcome back to another video. Today we are going to talk about one of your favorite stocks, Tesla stock, ticker symbol TSLA, since they reported their quarter earnings last week. It is incredible the demand that this stock has right now in the YouTube space and different Discord groups, and I thought I could update my Tesla stock price forecast for this video. So for that, we will first analyze their earnings, talk about expectations, and then update my Excel sheet to what they actually had in revenue and more. So if you're new to my channel, please consider subscribing and smashing that like button since it really helps my channel out. And also I have a completely free Discord group chat for that is down in the description below. I do have to say that when I talked about my Tesla stock price forecast is because at the beginning of the year I did this video where I showed you guys my expectations for Tesla in the next 10 years, where I thought Tesla would be in 2030. I do want to clarify some things I did not mention in the video, and many of you noticed I did not mention my expectations for battery, solar energy, and robotaxi businesses, but I was taking it into consideration in my spreadsheet. I did add them up in my spreadsheet, just that I only show the car business. So with all that said, I know that Tesla is not just a car company. They are way more than that, and that is why we can not only compare it with companies like Toyota or General Motors, because Tesla do offer way more things that in the long term will help boost their growth, and that is what we are going to talk about today. Tesla reported a total revenue for the quarter of $9.03 billion for their automotive sales, $280 million for the leases, $752 million for the energy sector, which is a huge increase, $678 million in energy generation and storage. They beat my expectations in every sector, but I was not far behind. They reported a net income of $296 million, which obviously is a nice growth in the net income on a yearly basis and a quarter over quarter for the whole 2020. Now, for the whole year, they reported a total revenue of $31.5 billion. They delivered a total of 180,667 vehicles on quarter four, which is an increase of 61% year over year, in which Model 3 and Model Y saw a huge growth of 75% year over year, achieving their 500,000 vehicles delivered for 2020. Now, something investors did not like was their margin, since it has been improving in the past quarters, and for this last quarter they missed expectations. According to them, it was because they stopped selling Model S and Model X to sell their new S and X, and also because they invested in their Fremont factory and have been having some instability in their supply chain due to the pandemic. But supposedly they actually had an improvement in margin if we take these adjustments as temporary, so we will have to wait and see next quarter and see how they improved. Now, they have upgraded their Fremont factory to launch the new Model S and Model X, which includes a new powertrain, new interior, exterior, and other improvements, which we might talk about it later on the video. According to them, the production of these vehicles will resume in quarter one and ramp back to full capacity over time. They also increased their Model Y production. For their Shanghai Gigafactory, they were able to demonstrate the ability to sustain Model 3 production at or above a run rate of 250,000 vehicles per year. Model Y production started in late 2020 and is in the process of ramping to full capacity. They also just started shipping Model 3 vehicles from Gigafactory Shanghai to several countries in Europe and Asia Pacific, which supplements production from to Freedom Factory. For their Gigafactory in Berlin, while their market share in Europe increased in 2020, Gigafactory Berlin should enable a significant increase in local deliveries similar to what we saw after construction Gigafactory Shanghai. They have already started to move machinery into the building as well. So right now they are able to produce 100,000 Model S and Model X in Fremont Gigafactory, 500,000 Model 3 and Model Y, and 450,000 Model 3 and Model Y in the Shanghai Gigafactory. For their Berlin Gigafactory, they will eventually reach a capacity of 500,000 to 550,000 vehicles more, and their Texas Gigafactory could be another 500,000 vehicles. So after those two new Gigafactories are completed, they will have production capacity of 2 million vehicles per year, which obviously is a huge increase for the company. Let me tell you that they are going really fast. They posted these pictures so we could see the advances in construction for their Texas Gigafactory, and within 3 months they have advanced a lot. In here you can see how their market share is growing more and more every year in different regions, even with the pandemic. Obviously their highest one being the US, then Europe, and lastly China. Now their energy storage deployment grew substantially this year. It surpassed 3 gigawatt hours, which is an increase of 83% year over year. And their solar retrofit solar roof also saw a nice increase. In 2020, solar deployments increased 18% year over year, since apparently they improved their solar retrofit strategy. Now, on their outlook, they said that they are planning on growing their manufacturing really quickly. Onto a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. In some years, we may grow faster, which we expect to be the case in 2021. The rate of growth will depend on our equipment capacity, operational efficiency, and capacity and stability of the supply chain. Also, they have sufficient liquidity to fund their product roadmap, which they saw an increase of $4.9 billion in the cash and cash equivalents to $19.4 billion. They do expect their operational margins to continue growing over time, continue to reach industry-leading levels with capacity expansion and localization plans underway. Also said that their Tesla Semi deliveries will also begin in 2021. Now, something that impressed us is that apparently Model S Plaid, the new one, will be ready for delivery this month, February 2020, which is way earlier than we were expecting. I do have to say that I found these models very futuristic. Don't know if the steering wheel is comfortable or not, but the screen is horizontal, still has the screen in front of the driver. They have added a little screen in the back, which I found it very interesting. And the exterior looks kind of sexy in my opinion. Kind of the same, but with a little change that make it different. Let me know in the comment section below what you think about the new models. Do you like them or not? Now, on my forecast, I was projecting a revenue of $815 billion by 2030, which would give me a possible stock price of around $3,500 with a PE ratio of 30. I know it sounds like a lot of money right now, but we are talking about 10 years away. Obviously, we can't say that Tesla will have those numbers right now, but there are companies like Amazon that is a $1 trillion company that has almost $300 billion in revenue. And in my opinion, by 2030, Amazon will be able to grow way more and be a $1 trillion company in revenue. Walmart as well, they have a revenue of $500 billion. And if they are able to continue with their growth and innovate even more their e-commerce and maybe bring new services, they could easily reach that mark as well. We also have to take into consideration that Tesla is expecting a yearly growth of 50% in deliveries, which in my opinion would be a huge growth only from deliveries. Then we have to add their energy, solar, and services that they offer, which they also are expecting it to grow since they are looking to integrate the solar industry a little bit more and more. And as Chamath Palihapitiya said, the big disruption is coming from power utilities, and as they said on their earnings call, robotaxi vehicles utility will increase approximately 5x, and even if it only 2x's, that would be doubling the company again, which we have to take into consideration that robotaxi will be huge for Tesla and Tesla owners as well. They are going to put all these vehicles in the robotaxi network and have them earn tens of thousands of dollars in profits every year for the lifetime of the car. That would definitely help with the boost of their margins. We have to accept that Tesla is years and years ahead of their competitors, and that is very important because that could make it easier for them to continue innovating and still seeing massive growth. Their battery costs should decline over time and should definitely help Tesla increase their margins, and even more with their next $25,000 car that they are planning to start selling in the coming year. We also have to take into consideration that the that President Biden will be supporting electric vehicles as of what we know throughout its presidency, and might start offering rebates and new tax incentives to buy EVs, which could help with the growth of EVs in the US. And in my opinion, Tesla is the best company for that. Analysts are expecting a growth of 51% for this year 2021 to $47.7 billion, and are also expecting the stock to go as high as $1,200 or as low as $67, which would be a 91% decrease, which, if you ask me, I don't see that happening. If they continue posting excellent revenue growth and earnings and expansions, they will continue growing, and their stock as well. Will it drop in the short term? Who knows? Maybe it will, but I don't see it going to $67 per share. Ron Barron, this popular mutual fund manager, said that he is expecting Tesla to be a $2 trillion company within the next 10 years. They have been investing in Tesla since 2016 and still expect that massive growth for the company in the next 10 years. If you ask me, Tesla will continue growing more and more and more while they expand more their energy and solar businesses, while they come out with a robotaxi service and full self-driving service and more new vehicles. They will start selling the Cybertruck, the Semi, and the Roadster within time, and that will help with the growth as well. I do think that Tesla is not over and that they will continue growing within the next 10 years, or even more, since within the next 10 years many countries will ban gas and diesel vehicles and will only permit EVs. And in my opinion, Tesla is very well positioned for when that happens. I think that they will continue expanding, opening more factories, or expanding the existing ones, and will always be the leaders in the industry. I do think that one of the best options will be to open a factory here in Latin America, because for the $25,000 vehicles, that would be a massive car, or excellent growth for the company here in Latin America, because it is a cheap car in comparison to other cars. Obviously, there are competitors that will appear, such as Apple, but we do have to take into consideration that Tesla has been collecting millions and millions of data points for years and years, and that is what has helped them be ahead of their competitors. I know there is way more things to talk about this company, but I think I made the point with this video. Thank you everyone for watching. I hope you enjoyed the video. Please smash that like button and subscribe, since it really helps the channel out. If you want 4 free stocks, we will give you 4 free stocks when you open an account with them and deposit $100. The link for that is down in the description below. Thank you, and see you next time.